The dynamics in the startup ecosystem. It further democratizes investing, sort of like Robinhood has done for trading, but at the VC level. But could it increase risk as well, lead to more startups that perhaps haven't been vetted by VCs or investment professionals that do this for a living?
I mean, yeah, that's certainly possible. But, crowdfunding has been around. As you mentioned, the limit's gone up from 1 to 5. The first crowdfunding round was in 2015, I believe. And there have been basically 0 cases of fraud or scams in that market. These deals are still vetted by these crowdfunding portals. On the other hand, public markets have seen plenty of fraud. So I don't think that this is sort of going to increase or really, I think sort of the average person, the little guy, quote unquote, is actually pretty sophisticated and can do their own research and make good investment decisions. The other thing I would add is regulation. Crowdfunding is heavily regulated. So, we had to file a Form C. You can look that up. If you go to raise.gumroad.com, you could read all of our financials. You can see, the history of the companies. And that's a requirement for all companies that are raising these kinds of rounds. SPACs, on the other hand,
right? And I think that's fair. Yeah, okay, that's fair. Jason, let me come to you. I mean, we've just seen over the last year and a half, year or so, the explosion of SPACs on the scene. Do you think that we'll see kind of a similar effect here, a proliferation of startups and this type of crowdfunding investment?
I do. I think SPACs are a bit disingenuous, personally. So I like this more direct form of investing where you know what you're actually buying into. And small investors can finally get involved. I think that's really nice. Forever, there's been a very, very high wall. And anytime there's a high wall, there's something hiding on the other side that's really good that other people can't get to. And I think it's nice to lower that wall. And so I'm excited to see where this goes. I do think this direct investment into small private businesses is ultimately a good thing, as long as people, of course, do their homework, which they should do with any investment. But at least it's direct and it's clear. Jason, and then I appreciate.
Why are SPACs disingenuous? Aren't you just putting money with someone who you trust to make the right investment? How is that different than sort of putting money directly with a founder? You may not know as much about them as, say, someone who is going to take a big stake in that company through a SPAC.
Well, at least you can see the financials of the company itself that you're putting money into. With the SPAC, yeah, you're betting on somebody, which is fine, but you don't really know what they're going to do down the road. People's point of view changes, and I don't know. I just think they're a bit disingenuous. It's a bit of a mystery investment.
But you do see the financials when it comes time to keep that investment in that special purpose acquisition vehicle or get out. So how is it different?
Well, you see them later. Yeah, that's true. But you put money in with a person first, and then they decide if they want to buy or bring other private companies public. So yeah, I mean, look, I find them I'm just giving you my opinion. I find them to be a bit strange and disingenuous for that reason. But I just appreciate the direct investment into something where you know exactly what you're buying, you know exactly what you're buying, when you're buying it, what you're getting into exactly. It's a more direct, in my opinion, honest way to put your money to work. But people are free to do whatever they want, and maybe I'll be proven wrong over time. Maybe not. Doesn't even matter, I guess. Just my opinion.
Okay, so here, let me come back to you. As a founder, the idea of raising money from an experienced venture capital is their value add, who they can introduce you to potential deals and partnerships, help you find talent when you are pooling from such a large group of different individual investors. And they may be customers with a lot of value add, but how do you capitalize on that, take advantage of that when there's so many?
Yeah. I mean, look, like I've raised money from venture capitalists. I've raised money from Excel and Kleiner Perkins and other folks in the past. So I have that experience. I've co-invested with them. I have my own venture fund too. So I can get that help if I need it. And frankly, a lot of them are investors in Gumroad now. Several of them have invested directly via this crowdfunding round because it's open to everybody, including VCs. I think, getting help from more people is not hard. I can tweet out, hey, I need help with this. And I get 50 DMs and then I go through them. It's really not a really big deal. And frankly, like a lot of founders who have raised money from Silicon Valley VCs often are disappointed by how much value add they think they're going to get. And then they realize they're one company in a portfolio of 50. And if you're not Uber, if you're not Instagram, by the way, I've been in this position with Gumroad for several years. We started the company in 2011. You don't necessarily get the help you think you might, and it's up to you, frankly, right? Like you're the founder. It's your company, and so yeah, I think it's okay to say, it's my thing, it's my responsibility to put my investors to work, and I think we have 7,600 investors now. My guess is 7,600 investors are going to be a lot more valuable, especially when they're a lot of our customers and our community members than like.
Shepard Smith here. Thanks for watching CNBC on YouTube.